Welcome back to our YouTube channel. Our topic for today is to hedge or not to hedge. Now, 2 weeks ago, we discussed about to hedge or not to hedge from a retail perspective. But for today's topics, we are going to come from an institutional and corporate perspective. Whether should we hedge or we should not hedge? This is a common question I was being addressed for the past 2 to 3 years. Nowadays, having a company is not easy. Running a business is not easy. Subsequently, a lot of things that you need to take note, because hedge or not to hedge is going to affect your bottom line. So today, for this particular session, we are going to discuss, should we hedge? Whether our company need to hedge or not, or we do not need to hedge. Then second part is, when should we start? So as usual, before we start, if this is your first visit, please remember to subscribe to our YouTube channels and on your notification bell. My name is Ting Ting. This is our disclaimer that I need to start with. Our topic for today is only meant for education purposes. There's no buy or sell call. Now, this is the first thing that we need to define. What is hedging? For the previous topic, we already discussed what is hedging. I already defined clearly about what is hedging. But before we start with our topic for today, we need to really understand what is hedging. So I'm going to give you a very short definition. At least you really understand what is hedging before we start with it. Now, hedging is something for you to protect your downside risk. Or in short, how do we reduce our risk in our company or in our corporates or in our institution itself? So this is the areas that we need to look at. One of the examples easier for you to understand as a layman perspective is like when we are buying an insurance, in a way we are doing a process called hedging. You might not know, but this is the easiest way for you to understand why we are buying an insurance. We want to reduce our risk. Reduce our risk not in terms like reduce our risk in accident, etc. No, but reduce our risk that we need to fork out a big sum that it might impact our life or our daily life as well. So this is the simplest example of hedging itself. So any part of it, if you cannot understand, you use back the concept of insurance, then it's easier for you to understand exactly what is hedging. Now, when do we need to hedge? There are many circumstances that we need to hedge, but in short, for you to easily understand, to ease your understanding, these are the two main parts that will affect us, whether do we need to hedge or not. It will affect our decision, whether do we need to hedge or not. One of it is the volatile earning. Second one is anything that is going to affect your production. Then we really need to hedge. In the next slides, I'm going to explain to you what is the volatile earnings, what is the production itself. As a business owner, you should know or you should understand that this is the time that we definitely need to hedge. Anything that is going to affect our earnings or anything that is going to affect our production. Either way, because if it is going to affect your production, it's going to affect your bottom lines as well. So the keywords is the bottom line. Now, why hedging is a must? I'm going to give you 3 main reasons why hedging is a must. A very simple reason. We are going to start the first reason called protect your bottom line, which is going to clearly explain the previous slides as well. When it comes to any business, very simple that we understand your revenue minus your cost, it will be your profit, your gross profit itself. So anything affecting your revenue or anything affecting your cost will impact your profit as well. So in short, for us to increase our profit, it can be we increase our revenue or we decrease our cost. Then you will have a bottom line, which is your gross profit that is high as well. So anything that is going to affect our bottom line, which what we call as your profit, is some things that we need to take note. That's why anything that will affect your gross profit is some things that you need to hedge as well. So this is the part that we are going to look at, and why revenue or cost is some things that we need to look at, which is going to directly affect our cost. Don't forget, coming from a revenue or coming from your cost, the simple mathematics is your price times your quantity. anything that's going to affect your price. It doesn't matter you're going to make it or anything that's going to affect the price in terms of your cost when you're going to buy it, it is going to affect your bottom line as well. So anything affecting this along the way until your bottom line is some things that we need to look into it, or is some things that we need to hedge. So this is the first thing. And second thing, we need to understand that we need to have a more stable bottom line, which brings us to the next reason why we need to hedge. The second reason is the market volatility. Nowadays, especially these few years, right, the price volatility is huge. Unlike the previous 10 years, which you can't see much volatility in any areas, like for example your interest rate, your price. It doesn't matter which areas of the price, which area of the commodities, anything that's going to impact you, interest rate, etc. The volatility compared to 10 years ago is relatively high. I give you one of the example. It can be anything, your crude oil, it can be your crude palm oil, it can be your soybean oil, it can be your currency. Your currency, the volatility is high as well. I'm not quite sure the rest of the world, regardless which countries they are from. Like for example, from Malaysia itself, our ringgit Malaysia itself, the volatility is relatively high. So I give you one of the example. For example, in this one of the example is the crude palm oil futures. You can see that for the past maybe 20 years, since 2000 itself, sometimes the volatility within 5 to 6 years or even 7 years is just within the range of 500 per metric tons. But you can see starting from 2021, within 1 to 2 years, the volatility can be up to 4,000 per metric tons, 4,000 ringgit Malaysia per metric tons. Just imagine if your company is evolving, it doesn't matter whether you are a producer or you're a commercial user, even 1 month you're using, let's say 1,000 metric tons, you times with 4,000, how much is it? The impact itself, even worse if your company is using more than that. It doesn't matter, as I mentioned to you, whether you're a commercial user or you're a producer, both is going to impact. Just see that which direction is going to impact you more. So even if you're a user or you are a producer, both direction you can see the market volatility is going to impact you as well. So that's the reason the current market volatility is high. We need to hedge to reduce the kind of volatility. Because when you reduce it, like the previous slides, when your bottom line is more stabilized, it's easier for us to even, like for example, budget or do our budgeting or do our planning. Sometimes, let's say for example, the worst scenarios is we worried that this year itself we are making a lot of money, next year we are suffering a huge money. You're going to see a lot of things that we want to do or we plan to do or we already budget in, it's harder for us to execute it. So our bottom line, not only we want a positive bottom line, or we want to increase our bottom line. Another areas that we need to look at is we want our bottom line to be more stable. Not 1 year making huge profit, the other year making huge losses. It's harder for us to budget, it's harder for us to plan, and you can see that most of the time we are going to adjust our planning. We spend a lot of times adjusting our planning. We spend a lot of time adjusting our budgeting instead of focus in the areas to increase our revenue or decrease our costs. Now the third reason why we need to hedge is because when we are running a business, a lot of risks involved. For example, we're going to have currency risk. Any companies, when you do business, if you're not only doing your business in your local countries or in the countries that you are reside in, you're going to impose or you're going to expose to this currency risk. So currency risk is definitely anything that you're involved in. So long you involve in other countries, then definitely you're going to involve this currency risk. So many other types of risk: interest rate risk, your commodity risk, your supply demand imbalances, geopolitical risk, whether in disaster, legal regulatory risk, liquidity risk, credit and counterparty risk, and so many other types of risk. So long as risks are involved, hedging is definitely something that we need to look at it. Now, the next part is what risks are we looking to hedge? any type of risk, like just now whatever I already mentioned previously, so long as risks are involved, we definitely need to hedge. So later I'm going to give you one of the examples, like for example, what kind of risks that involve in your business that you need to hedge. So in short, I give you an example. If you are fund managers, you're managing a funds that's involving in stock market during a downtrend, you can't do much because you know that based on our economic cycles, certain cycles our stocks doesn't perform. So during that particular economic cycles, if your stocks is not performing, what should you do? Instead of sitting there doing nothing and you are under tremendous pressure, why don't we use futures, for example, to hedge? One of the example, you can use futures to hedge, you can use ETF to hedge. There are so many ways for you to hedge it. So for example, if you're using your futures to hedge, you can short your futures. So during a downtrend, although your stocks keep on suffering losses in your funds, but on the other hand, your futures is going to make profit. That is, it will be able to cover the losses that you make in or suffer in your stock portfolio. So that is one of the way that we can look at it to hedge our whole portfolio. Now, another examples that is clear or easier for you to understand, I believe all of us, we eat McDonald's as well, then you can see any of the financial statements that you can find online in terms of McDonald's, they do a lot of hedging. I give you some simple example of what they are already hedged or they are currently hedging in. Like for example, in terms of commodities, anything impacting their cost or anything affecting their whole production, like for example, potatoes, beef, chicken, etc. They are hedging currently. Then the next part, foreign currency. They hedge in their foreign currency as well. Then in terms of interest rate, because foreign currency, they involve a lot of countries. Like for example, when you import the goods or you import the commodity itself, you involve one of the currency. When you sell it in another countries to your retail clients, you involve another countries. Then definitely you need to hedge your currency itself. Then your interest rate, because of your borrowing, etc., you definitely need to hedge your interest rate. So there are many areas that McDonald's are currently hedging. So we need to ask, in our own company, in our own organization, which areas that we need to hedge so that we can reduce the volatility. It doesn't matter. To be more precise is to make your what we call your bottom line to be more stable, first thing. Second thing is to increase your bottom line as well. So hedging will help in this area. Now, as a summary, these are the two questions that commonly we need to ask ourselves, whether should we hedge or we should not hedge, and when to start. Now, first thing, we need to understand why we are not hedging. These are the common reasons given by many of the corporates. For the past, I would say that many years that we are doing hedging consulting, these are the common excuses being given. Why people are not starting yet, our clients before they start, these are all the reasons that we have collected. Now, the first reason is fear, because uncertain, you do not know, you don't understand what is hedging. So when it comes to uncertainty, commonly we will fear about it. It's common, you're not alone, don't worry about it, busy. Many of us, we are busy. You see, when it comes to our company bottom lines, don't forget, one of the part is revenue, another part is your cost. But we tend to put a lot of our effort into increasing our revenue. But at the same time, if we can put some effort into reducing your cost, both sides will be benefited because your bottom line will increase. So not only looking at getting your business in, sometimes a lot of excuse being given, hey, I have no time, our company with other more major issue. But don't forget, this is one of the major areas that you need to look at it, because it is going to affect your bottom line a lot. But sometimes you'll be very surprised by looking at hedging part, or you impose this hedging exercise, it will help to increase your bottom line tremendously. because we experience so many of the cases. Now, the third part is lack of capability. Many of the companies, you do not have this division to really look into it. Do you really need to have very big division to look at it? The answer is no. You just need to start somewhere. But most important thing, please do not DIY, because you see before some of the companies, they started by DIY, pick a few candidates, then start to do the hedging, read a lot of articles or read a lot of watch a lot of YouTubes, then they start to DIY by themselves. But when it comes to hedge or not to hedge, it involves a lot of professional areas, which you need professionals to do it. That's why you need to consult your consultant, your hedging consultant, before you start with this hedging. We see so many cases when they DIY, they fail tremendously. Even worse, the scenario. That's why consulting your consultant is very important. Like for example, for us, many of the companies consult us how to start with it, how to do it, etc. Then you will have a proper way to start with your whole hedging department, or to start with your whole hedging activities. Now, the next is peers are not doing. You look at your peers and they are not doing, then you think that you do not need to start. But the time that your peers start and you're going to start, sometimes it's too late. Like for the past 2 to 3 years, many of the companies approach us, asking us to help them in terms of the hedging perspective. But the point is sometimes you're too late when you come in, because the market already went up a lot. You're suffering a lot. So when you start, it will help you for the next round, but not this round itself. So if you can, you start as early as possible, then it's easier. It is a bit like your insurance. Just imagine, it's not that right now your company, let's say for example, caught a fire, then you start to buy insurance. It is too late. So if you can start even earlier, it will be better. Don't wait until your peers start to do, then you think that you need to do that. It might be too late. Now the next part is peer losing money hedging. You can see some of the even local companies, big corporates or big companies, they are suffering in terms of hedging. And some of the news will disclose that they have a huge losses in terms of hedging. But we need to understand, is it the correct terms to use? Actually, they are suffering losses in hedging or not. Definitely somewhere else they are making. It's just that people might not really understand the company itself. That's why they thought that the hedging, the losses in the hedging that they are suffering cause the whole company to collapse. But it's actually nothing to do with that. That's the first part. Second part, do they hedge correctly or not? If any companies, you perform hedging, you perform it correctly, you should not suffer huge losses. Even you are not making money, you should not suffer huge losses. This is something that I can assure you about. Now, to hedge or not to hedge, I'm going to answer these two questions, common question, whether we should hedge or not, when to start. Now, this is the conclusion. Hedging is definitely a must. It's like your insurance. You ask yourself whether can you decide not to buy insurance or not, then you will get the answers. Hedging is definitely a must. And when you need to start, you must start it right now. Because preparation might need some time. Maybe some of the companies, it depends how big is your company. Some companies require 2 months. Some company even require some preparation until 9 months, etc. Or even up to 1 year just to prepare that particular part. So some of the companies are very complicated because they involve a lot of the areas that they need to hedge. So it very much depending. But the conclusion, very important points that I wanted to highlight is you must start right now. Don't wait. Because nowadays, because of so many reasons that just now already provided to you, that's only part of it. That's why you must understand hedging is definitely a must. It's like your insurance. You should not ask whether should I buy insurance or not. And when should you start? You must start it right now. So with that, I'm going to conclude for today's session. And remember, please subscribe to our YouTube channels and on your notification bell. I'm Ting Ting. I'm going to see you in our next session. And I hope that today's session really helps you in your company and you should start right now to prepare for your hedging perspective. It can be from currency hedging, it can be from your interest rate hedging, it can be your commodity hedging, gold, your commodities, anything, crude oil. If you involve in crude oil itself, your soybean oil, your crude palm oil, gold, etc. Many areas that we need to hedge. So I'm going to end our session for this particular session. I'm going to see you in our next video. Bye bye.